Oh, hello. Thank you, Scott. Hello, Andy. What's up?
Hey, hello, Scott. Hello, Steve. Not a whole lot. Hi, everybody.
All right. Well, it looks like we got visuals and looks like we got audio. So let's get right into it. Welcome, everybody, to the recurring Tuesday afternoon trade of the week. Your host is myself, Steve, and Andy. We've been trading the markets for about 20 years now, almost all of those 20 years together, I might add. So we have a like-minded hive mind personality here, so I'm glad to always have him help me out. Uh, just the disclaimer slide, trade of the week. We're here to talk about content. Trade Ideas is a software as a service company. We provide content and subscriptions to a really cool technology, and we're going to talk about that today. So just a reminder, anything you hear or see should not be construed as personal investment advice. If you need investment advice tailored to yourself or your family, you really got to go seek out those registered investment advisors and the brokers who took all the tests in the right fields to be able to do that. All right, so let's move on here. Quick beginning slide as people usually kind of file in a few minutes late here. Gives us an opportunity to remind everybody of the amount of onboarding and concierge services we have for our very in-depth program software that's been going on 14, almost 15 years now. Primarily the afternoon webinars, starting there, like yesterday with myself and Jamie, today myself and Andy. We have Wednesday and Thursday as well. Each of those afternoon webinars are at 5 Eastern. Usually pre-canned content. There's usually a theme that goes along with it. Then we take questions at the end if need be. On Fridays, notice down there at the bottom on this slide, it says 11 to 2 Eastern. It's basically an open forum in the same GoToWebinar style that we're doing right now. We share our screen and talk at you guys, and you use the question box to interact and ask us questions of things you're having a hard time grasping or can't figure out on your own, or just basically anything. So the topic is totally open to everybody on the Friday support sessions. It's 3 hours, come one, come all. And at the very bottom there, the Trade Ideas University is a new thing that we started a few months back, and it's been received very well. It's a 4-part Trade Ideas University series. Starts off on Mondays and finishes on Thursdays each week, and then starts over. Starts with the basics on the Mondays and finishes up more on the advanced stuff by Thursday. All of that is available to anybody really who wants to join, but primarily the TI University people are the people who have subscribed and are ready to go, and they're just licking their chops to get as much info as possible. Lastly, on the right of this slide is the screenshot from Barry Anderson's live trading room, which is a great place to come and learn, not only learn trading, but learn our product as well. And Barry is a virtual saint when it comes to moderating that room full of 500 people or so, and at the same time trading his account, helping people with technical support, demonstrating the product. And there's a handful of other guys in there and girls that are pretty good traders as well. You start to see who those people are. And the great news is that room is absolutely free. That gives a lot of other chat rooms out there. Trading rooms are good run for the money, even if they're charging 99 bucks out there. So I think we're a industry killer by offering a free live trading room with as much knowledge and good content as we have every day. Although Barry was sick, had a hard time getting out of bed today. Very unusual for Barry, but for the most part, he's going to be there Monday through Friday from bell to bell. And again, it's free. Free is a great price. And here's just a quick reiteration of the TI University and the different iterations we have, 4 different days. Definitely check it out if you sign up. It's probably one of the first places you're going to want to go. And all of that is really transcribed into just a really nice subscriber building a base of a subscriber base. Back here is where we introduced our AI. So we're just chugging higher and higher. And then the old man and machine, this is where I always like to start off the theme of my webinar, to remind people that we provide the machine. Trade Ideas is a great machine, but it still provides a human element. And as Paul Tudor Jones put it in that quote there, no man is better than a machine. However, no machine is better than a man, or human in this case, with us, and a machine. And that's who we are. We're the humans with the machine. And we have a lot of good stuff, I think, to show you, especially in the AI stuff. This really does ring true. Today's agenda, oops, that's old gap and crap. I should fix that from last week. We did not have a gap and crap today, but I will go over the market recap. Andy will help me go over the Holly AI recap. The trade of the week, which is the keystone of this webinar, we had two ideas this week. I'm going to talk about both of them, and I'm also going to go back and revisit SONC, Sonic, what happened last week. And I'm really kind of hoping we have some people that are tuned in that were hearing what I was saying last week, because unfortunately it was very prophetic in the worst way. It happened, and I'll talk about what I mean by that. And then I've got about 8 stocks between the end of the market and the webinar I went through, as I usually do, and kind of looked at all the Holly trades that came through, and some of the charts are not bad, and I wanted to mark them up and again demonstrate how to use the price alerts, and then I'll share those 8 or 9 price alerts that we set together, and I'll explain why I like them here and what the thinking is. And then if you want them before the webinar is over, you can have a parting gift, and you can take those with you. And if they trigger in the future, well, they're going to trigger on your screen the same moment they trigger on my screen. All right, so let's get started. I'm going to start off with the SPY, Standard & Poor's 500, using the SPY ETF. Again, for those that were here yesterday, I talked a lot about the weakness we had on Friday and Monday, but the SPYs and the Qs were digging into their respective levels of where you would kind of look for some buyers to step in. I'll get to the FANG stocks in a moment. But for now, we had a really nice pullback for 2 days yesterday, and I said, it kind of depends on, what happens today when the bell rings. Is there going to be further selling for any reason, or is this going to, constitute enough of a pullback to maybe dig in and try and build a higher base camp? And that orange line is very significant with resistance lines back here, a little bit of pivot levels back here, and well, this line is very significant. And today we were able to trade back above that line, and more than anything, importantly, hold a close above that orange line. If we had drifted back below this orange line, I might be speaking a little different tune today. But again, the idea was to figure out yesterday, was this the beginning of something, or was this just a much needed breather? Again, stocks and indexes and trends and price action needs 3 steps forward and 2 steps back. That's typically what a good trend will be. Nothing goes in one direction forever. There's got to be give and take. So okay for today in the SPYs, and I'll get to the Apple earnings in a moment, but the point is the market closed firmer today before the Apple earnings even came out. And as you can guess by the way I'm talking, they seem to be decent earnings. Over in the NASDAQ, which was very much a leadership, NASDAQ got pulled back a little bit more. The choke chain got pulled back a little bit more on this dog because of Facebook and Twitter last week. We had Facebook and Twitter not really lighting the candle on fire in terms of earnings, and the Qs really fell in that backdraft along with them. But today, and we can pull up the stocks, and I will in a second, they also stabilized. So the level of note, and what a lot of other people that I see on Twitter that I respect and follow, we're seeing the same things. If we look back here, this bounce occurred right at that blue 50-day moving average. That's kind of the rule of thumb moving average. If a stock's in an uptrend, it better be above its 50-day moving average. Well, it held back here, and yesterday in Jamie's webinar, I said, well, we traded below it, but closed right above it. And I think that level is going to try and dig in and hold, and today's action certainly helped solidify that theory as well. Looks like we touched it on the lows of today, but still closed above. We can go now to the post market. Let's do this on the intraday here, and we can see what Apple has done. So basically, the aftermarket here in the purple is lifting the markets higher, and especially the NASDAQ because of Apple. Here's the spiders. They're also moving higher. So everything I just said in terms of a nice recovery today and digging in and holding is further being demonstrated in after hours and will translate into the action tomorrow. Here's a quick look at Apple. So you can see it went out about 190. It's trading about 196 right now. On the daily chart, that little green tag just so happens to line right up with all-time highs for Apple. So Apple's flirting here in the after hours with possible all-time highs. Conference call is probably still yet to come unless nothing really bad is said in the conference call and Tim Cook doesn't trip over himself. This gap up in the aftermarket will probably hold and translate into tomorrow. But again, Facebook and Twitter only wish they could have those types of earning reactions. They're still bleeding pretty hard off of the earnings from last week in Facebook. and in Twitter as well, but you can see there was no further damage done to the downside. Tomorrow we have another big one, Tesla. This is aftermarket, and I'll come back to this one kind of on the trade of the week because there's a little nuance there in Tesla for those that are adept in options trading. So looking at the other two, IWM, let's see what's going on here. Decent bounce today, but basically closed right where we opened. It held those lines I was drawing in Jamie's webinar yesterday. And then the Dow still has a lot of work to do to get back to prior all-time highs up here, but nonetheless, the Dow recovered as well. So again, on the heels of the earnings of Apple, everybody loves Apple, and it's definitely a bellwether company. I think tomorrow we should be going into the session with at least a bit of a bullish euphoria, unless something happens between now and then. We shall see. Let's see. One more thing I wanted to talk about, and I talked about it in Jamie's webinar last night. The funny thing about the Netflix, remember, this was the first one of the big FANG stocks, F-A-A-N-G, Facebook, Amazon, Apple, Netflix, and Google. Those are kind of, that's the acronym for the big boys, the big horsemen. And Netflix was the first of those to report last week. And what I thought was really interesting was they had bad earnings, but look at what happened, a big gap down here. And this is a great testament to the conditioning of the buyers and the buy the dips and the permabulls that are out there. They jumped right in and said, oh, great, perfect opportunity to buy the dip just like it's been working for the last 8 years. Well, it worked, but I'm convinced this was more of a conditioned buyback. And Andy talks a lot about this in bear markets sometimes. You get some really gnarly rallies because the condition is still people thinking this is a dip that needs to be bought. But it just took about a week and a half before that rally fizzled, and now everybody that bought that dip back there is underwater again. In my book, and Andy and I used to do this all the time when we were running what they call a mirrored trading account. We had an account, and people also had an account at this company called Ditto Trade. And our accounts were all connected on the back end. So if Andy and I in the master account decided to buy something, everybody else got to tag along. And so a 1,000 share order turned into like a 25 or a 30,000 share order. Well, I bring that up just because when we were doing that, one of the rules, we had a few rules, and one of them was really to try and never trust a stock that disappointed on earnings without first giving it a few days to bleed out and let the weak hands get out, which is kind of what's happening over here in Facebook and Twitter, perhaps. All right, see, they're taking their time to bleed out the weak hands. Whereas Netflix, this was something that was so new to a bunch of conditioned buyers in a bull market, they hadn't seen that. And so I kind of chuckled to myself because in hindsight, it's 2020. After Netflix did this, well, yeah, the Facebook buyers and the Twitter buyers didn't necessarily jump in there as quick to try and save it. But now we have Apple, and that's pretty much it. Google also reported, and they didn't do too bad. They basically just filled their gap perfectly, I might add, right there. So Google is probably up after hours as well. A little bit, not much. So the FANG stocks were the real story of last week, and bleeding into today with Apple now doing okay. You might have some breaths of fresh air and relief come into the people that are looking to buy the dips in this market. So we shall see. Any thoughts, Andy, while I take a drink?
Yeah, you covered it. You covered it very well, Steve. And as far as the overall market, yeah, it's a pullback there in the spiders. And spiders have yet to take out that January high, though. We're going to have to see. The jury's still out totally on with me on that. So
up here.
Yep. So we'll see what happens. And yeah, you know, Apple is Apple. It did great today, but you know. There's still some other big boys out there that haven't done all that well. Facebook, Twitter, Amazon wasn't all that great, if you ask me. But
yeah, they gave it back. They gapped
yep.
up, but they gave it back pretty quick.
Yeah, and I thought that was a gift because I mean they had their beat their EPS, but that's a stock that's been moving on growth, you know, obviously. And but anyway, I'm not gonna get into fundamentals. But anyway, we'll see what happens. Apple, like I said, it's definitely is a big component of all the averages, but you need more than Apple to steer this boat. So,
and it's a shitty place to work. Okay. So let's move on. There's your market recap, everybody. We'll move on forward now.
All right.
Next up is I believe the Holly recap, and that would be. You want to take the screen?
Yep.
Or you want to use my screen?
I'll take it.
Okay.
Let me get the good old clean monitor here. And all right, guys. Well, what you saw today. Let's take a look at the spiders before we show everything, because I always say every strategy is at the mercy of to the market at some, at some point. So we did have a gap up today, which sometimes can make it more difficult, for Holly and any strategy out there when you when a good percentage of the move for the day was a gap up. There's your gap in the 15-minute. Looks like we were off to the races and then pulled back here and settled down. So it wasn't really a big move today in the spiders, but I was really, once again, really impressed. Holly's been on a tear lately, and obviously we all know now there's 3 Hollies. For those of you guys who are joining us for the first time, we do have 3 Hollies. You are able to toggle in between them by just going right-clicking in here and going to the segments and choosing whichever one that you want. Coming soon, but don't ask me about an ETA. It's going to be a dashboard where you will be able to see all 3 Hollies at one time, at least be able to see the trades that are firing off. It would be quite clustered if we try to get all this data on all 3 Hollies into one dashboard. But I think the key is for the subscribers to be able to see the alerts, in the entry times when they do fire off a trade. So it'll be easier for you to follow them for sure. One thing I noticed today is all 3 strategies came into the day with pretty much an equal amount of longs and shorts. I mean, the distribution was a little bit heavier on the long side, but for the most part, they had a nice array of shorts in the final cut. And what I mean by that is each night we back test all of the strategies that's in the hopper, the Holly hopper we call it. And there's about, getting close to 50, I think. And they have to have a certain winning percentage. You can see the winning percentage here and the profit factor right here. And they have to qualify on both metrics to make the final cut. In other words, to be able to be used the next day to spit out alerts for you. Then the thing I was excited about watching today is the great performance on longs and short. You can hear Holly Grail. This is Holly Grail. That's our original Holly Classic, whatever you want to call her. She had the best performance today, I believe, on both risk off and risk on. And Leslie, I hope I kind of gave you a background there on, she asked what Holly is, on what Holly is. It's our AI, artificial intelligence, and it fires off alerts, each day, throughout the day for people to decide if they want to take the trade or not. And during that time, we run a calculation of the risk off, and we run a calculation of the risk on. If you look at these exit reasons here, you'll see an exit reason for why Holly got out of the trade. Okay, there's a timed exit, profit saved, reduced risk. So she may be in a trade and get out for any of these reasons. A timed exit is simply that she ran the full optimized time in that strategy. Profit saved means she had some profit, started to run against her, she got out and kept the profit. Reduced risk, never, wasn't really in her favor, and instead of letting it go further against her like all good traders should do, she cuts the losses and reduces the risk. And the ones we love to see is target hit. I think we got about 3 of them in this one today. Nope, just 2. We love to see target hit, and we don't like to see stop hit. Okay, but as long as there's a greater amount of profits versus losses, that's what every strategy is based upon. Okay, and this and the easy way to do it, guys, when I set this up is I always have my risk off and risk on right beside each other. That way, if I get out of a trade, it's real easy for me to look at the column right next to it to see, how well the trade is still performing after or going against me possibly after I get out. But today, yeah, I was really impressed, and I'm not going to go over all the strategies. You can see there the final profit there in each one of them. So I'm not going to bring them all 3 up. This one did have the most trades in it. You can see in our top of our AI strategies window, Holly Grail had 29 trades today. We call them trades, guys. Just remember, they're alerts. Holly's not trading this. These are alerts for our subscribers to see, you know, if they want to take the trade or not, based upon their expertise in the market, you know, what's right for them. Maybe they don't like some strategies. Maybe they don't like the way a chart looks when she fires off a trade. For whatever reason, it's up to you to decide if you want to take the trade. And yes, what is timed exit? Timed exit, I explained that, is just, that's what she's optimized to do. So if I pull this up over here, you can see the time stop in each one of these strategies. So let's take example, Mighty Mouse down here. Okay, Mighty Mouse is designed for a 60-minute hold. So at the end of 60 minutes, Holly's going to exit this position, or, you know, once again, she's not really trading, and then you're going to see the timed exit. So timed exit, we always love seeing timed exit, because that means she ran the whole time, you know, without getting, you know, stopped out, or there was no reduced risk. In other words, the strategy ran the full 60 minutes. Because then what happens when you see this, like this FTR in Mighty Mouse, let's say you see the alert right there. Great example of alert where there's no pain. Alert goes off, the trade never goes against you. It just, you know, just creeping higher right there. Okay, the timed exit expires and she exits the trades. But as a trader, you might want to hang on for more and see if you can get more out of a trade. Holly, you know, we like to say that Holly's real good with, you know, entries, but you are going to be better. Steve highlighted that at the beginning of this webinar, man and machine. Okay, this is where you take over as a man, but it's because you're seeing what the market's doing. You're seeing what the stock's peers are doing. You're seeing so many different variables in the market that Holly maybe not be taking a look at, and you can decide if you want to hang on to the trade longer. This is why we give you a risk on column. So you could, you know, if you do get out of a trade, you can look over there. Like, I'm going to show this trade right here because this was probably one of my favorite ones today. HRTX, once again, no pain trade. Holly enters it right there at 36.40. Love this daily right here. Had a gap up recently, came down, filled that gap. Now, I didn't fill the gap all the way to this close, but that's okay. You can still fill a gap going back to a previous high. Okay, so Holly fills that gap yesterday, puts in a bottoming tail, pops back up, and then today you have a nice little horseshoe. You can't really say it on a 15-minute chart, but anyway, you can see what I'm talking about. A range break there, just a beautiful trade where Holly got out for profit save at 13 cents. But if you're looking at this trade, Holly got out pretty quickly. Everything is pretty much setting up there. So you can be the judge on whether you want to get out with Holly. If it's me and I'm looking at this, I'd say, I'm not going to take, 13 cents. I see more meat on this bone, and sure enough, there was plenty of meat, left on that bone. No, Heidi, no. As of right now, Heidi asked, so your software does not take the trade. No, our software, it's trade ideas. That's the name, trade ideas. We're giving you ideas in which you can take the trade. Okay. So, and yes, you have to have your own brokerage account. We're not a broker. We're presenting you ideas in which you can profit from. Okay. So, a couple of more here I really liked. The vault has been
doing very well.
Doing very well. I mean, everybody is excited about the vault, and you can see here, look at two of our top performers on risk off. I have risk off up right now, but look at this vault. This was one that went off, about an hour after the open, right there. Once again, there's your buy signal. No pain. Target was hit for $1 gain. That's $1 is a nice gain on a $25 stock. Here's another one, a short. This came out in two of our strategies today. No, I'm sorry, that was downward dog. This one right here, BLM. Once again, there's your trigger. No pain. I'm starting to see more and more of these no pain trades. In other words, you get, especially in this vault, you get the trade and you ride for the profits. No, these are not for pre-market moves. Okay, Holly does not start firing off alerts until the live market hours. All right, so another vault today. Let's see, sale. I don't think I even looked at this one yet. Yeah, once again, nice one. Fired off right there. Real no pain. You had maybe a 5 cents against you right there at the most, and a nice little pop up there, but not a huge winner. Only 13 cents on that one. But anyway, keep an eye on the vault. It's been acting very well today. This was a pretty one this morning that happened really quick. INST, you can see there, fired, triggered, and immediately fell off, and the target was hit. Now it bounced back pretty quickly because of the market, but or for whatever reason. But
Hey, I'd be really remiss if I didn't read these next 3 comments out loud.
sure.
Waleed says the vault strategy is on fire. The vault alone is worth the subscription fees. Happy face. David says, when was the vault strategy introduced? Not long ago, I know. I know you're liking that. That's why you asked about it. So yeah, it was just a few weeks ago it came out, and it's been getting a lot of buzz. And then DFD says, guys, don't downplay the vault. Holly's strategy. It has been simply fantastic, and in less than a week, I've paid for an entire year of trade ideas. Give Holly a big kiss for us. Will do, DFD. Thank you.
That's the kind of stuff we like to hear, and that's the kind of stuff you need to hear. Okay, guys, because if you're in here kicking the tires and you're looking at this software, and Steve just reading that off from our questions panel, people that are using this.
Glenn says the vault, Mighty Mouse, Sunrise Mover, loves them.
So yeah, good stuff, guys. Yeah, so yeah, you know what? I'm gonna end it right there, Steve. I don't think I have anything else to say, man. What's better than what you just read right there about all that?
Well, if you feel like it, you could answer Gary's question. One more touch on the risk on, risk off phenomena.
Okay. Very good, very good. And guys, don't worry. Like those of you guys in here for the first time and you're still kind of confused about what all this Holly is right here, you can come to our support session on Friday. We have these webinars throughout the week too at the same time slot. Tomorrow, trust me, Dan will be talking about Holly. So there's plenty of information. There's plenty of information out there for you to gather more stuff on Holly. So basically, we do have risk off. Okay, so if I look at risk off right here in the Holly Grail, you're going to see it's up 148. Okay, once again, if you're getting out for any exit reason that Holly got out for, okay, that is called risk off. In other words, she gets out for a timed exit, reduce risk, profit save for whatever reason. That is what this risk off is calculating here as the day progresses. Okay, you can see, you got your own little histogram right here, basically tracking the profits on risk off throughout the whole day. Now, if you were to hold every trade until the close, that is what risk on is tracking. Now, theoretically, risk off should be a little more smoother. Okay, if I look at risk on, you're going to see a few more deeper valleys because you're putting on more risk. So when the market does have a pullback, a lot of these positions are going to go against you. Of course, this pops up at the end, but you will probably, in most cases, don't get me wrong, I've seen risk on sometimes just all day look like a super slide, just straight up. But there are going to be cases, of course, when the market is volatile and you have a kind of a ranging day going from high to lows, where your risk on is also going to be, doing that with the market. So we're not telling you which one to take. That's not the point of giving you risk off and risk on. It's for you to use with your trading expertise, engaging, what you want to do with the trade. Do you want to get out for Holly's reason, or do you want to, hang on for more potential profits? Okay, thank you, Jerry. I'm glad you got that. Hold on, Steve. I think we may even have him more. Yes. Steve, when he comes back on, maybe he'll show you that.
The strategies.
Yeah. Maybe you'll be getting that ready while I read off another one here. What can TI offer to swing trade? Very good example. You come to the right one, Joseph. Steve's going to go through each one of these.
Not each one.
Not each
A
one.
few.
No, no, no. I take he's already gone
I
through.
already went through.
Yeah,
Yes.
he's already gone through each one, and he's going to show you about 9 or 10 of them that may be a very good swing setup. Okay.
Yeah, there's a reason Holly triggered something. It saw something intraday, and so those intradays pop up on my screen and anybody's screen, and then from there, human and machine, man and machine, working together using Holly to basically curate some of the finer charts that are out there and then go through them. And that's the point of me going through a few of them today, to try and show you what I like and what I don't like. Same with Andy. All right, so let's go back to my screen, right?
Okay.
And I've got it up here.
Okay.
So what I've got on my screen here, you guys, is trade-ideas.com, our main products, our main page. Just go to any page, and at the very bottom, you got a footer. And under support frequently asked questions, we've got one called AI strategy descriptions. And it will take you to this page here. You can download a PDF for your permanent copy, or you can scroll down to what's interesting. The vault, most people want to know, you know, this is, you click on that once, excuse me, and then open it up. Just a real thumbnail strategy description on what is going on with each of these. This one's in red. What does that mean? Well, it's a short sell, so anything in red is going to be a short sell. So for those that are looking for just a simple idea of what are these stocks looking for, and a lot of times in these descriptions we put in the price range. This is going to be stocks between 5 and 30, or stocks under 10, or stocks above 50. That'll be in there as well. So just go to our website and scroll to the bottom, and under frequently asked questions, you've got a good description base there. All right. Yes, we will go over some of these things, hold on to some of these chart requests. We've got a little bit more to go through here, and starting off with the trade of the week. And what I want to do is, anybody who was in the trade of the week webinar last week, try and recall what I was talking about with SONC, what the worst case possible could possibly be on that. I can't quite get it where I want it. Think about, yeah, right about there. Okay. Actually, no. This red bar was what we came into on Monday and Tuesday. So this was Tuesday, the 24th. This was a week ago. So we were looking at this red bar on last week's trade of the week. And I said, it's really unfortunate when they go through a little bit and then pull back like this. What you guys want to watch out for is them trying to drive the price down on the open, which if we go here and look at this on the open, where was that day? Well, I'm not going to try and find it on that screen. Basically, this candle tells us the stock gapped down right here at this markup, all right? What I had said was, looking back, it's very possible that on the opening range, we call it the opening drive, stocks open up, and here's what's happening behind the scenes, guys, and here's what I'm starting to, I don't want to use the word afraid, but I'm starting to fear a little bit that people are possibly using the trade of the week and then going in and then putting in a stop loss order down here, pretty much all the same place. Well, what happens is those stop loss orders, believe it or not, you're being sold out by your broker. And your broker makes money on the side by selling data flow orders, and it includes good till canceled stop loss orders. So you go to work thinking you're protected. The problem is that creates a real big fishing ground for these ETF, for these algos and HFT players. Primarily Citadel is a big one, and Virtue is one. I mean, it's the same thing that Bernie Madoff used to do. It's legal, and it's done electronically now. So I'm not sitting here trying to backpedal and you know, make excuses for why a trade didn't go the right way. Trust me, I'm not happy about it at all. And this is the kind of stuff that used to happen to Andy and I a lot. That's why I talked a little bit about Ditto Trade earlier on. So you could see some of the pitfalls and some of the hurdles we had to overcome with the gamesmanship that goes on in the market, and be accountable to people as well to say what exactly happened. Well, again, if you were on the webinar last weekend, remember I went back and I said, be very careful. It's quite possible they could open up this stock and try and jam down and run all the open stop orders and then turn around and reverse them. Well, that's kind of what they did. The stock gapped down. It was trading lower in pre-market for no reason, no news. The problem is that orange line, this orange line right here, is kind of where I said it might go to. The problem is it went below that line and took out the suggested stop on that trade. It's not the first time it's happened, and it's not going to be the last time it's happened. And like I said, I'm not happy about it, but I want to explain what I think is happening here. I'm 95% sure, and I know Andy is too, that we call them the opening drives. You look at stock charts and you see these giant wicks in the first 3 to 5 minutes of trading. And it's a complete cascade of sell orders all the way down, and then the buy orders pop it right back up. And everybody that got left holding the bag and lost their stock in that stop hunt is standing there with no position, and they've been, basically shaken upside down and position shaken out of them. So what can we do to try and avoid this? There's really only one thing that you can do to try and avoid this. That is either not put in good till canceled stop orders and turn your back on the opening. It's most egregious at the open. Let me just tell you, it's not the kind of thing that happens midday. It happens on the open, because all of the overnight good till cancel stop orders are coagulating and forming. And then pre-market, like I said, your broker has sold you out. You've got algorithms and high frequency trading firms out there that basically have a 4D chessboard that they're looking at. They can see everything. Is it fair? No. Is it moral? No, but it is what it is, and we have to accept it. We can't change it. So the only workaround to avoid these types of pitfalls is to either not use good till canceled stop orders, but if you have to use them, this is what Andy and I used to do. We used to pull them. We used to pull them so they didn't have a chance to get us on the open. Sometimes that can create a little anxiety. Sometimes it might work against you, but in our experience, we can tell you the majority of times it worked for us, where we did not get caught up in a disgusting stop hunt like that. So I kind of called that possibility as the worst case possible. The problem is it went well below that markup that I put right there and took out our stop orders, because I had the stop kind of just below that line, and they egregiously took it down and right back up in the opening out minutes, I should say. Well, hindsight looking back, it hasn't had much follow through since, but I wanted to talk about that because I got a few emails and people were frustrated, and I'm frustrated too. There's just nothing we can do about it, but all I can say is watch if you're using good till canceled stop orders. You might be able to look back in time and see a few times when the stock opened up down just brutally and then popped right back up in difficult fashion. All right, let me take this off because I can't stand looking at after hours. All right, so now we want to go to this week's trade of the week. I said pull your order, Heidi. That means don't put a good till canceled order that just sits there that the HFT crowd, the high frequency trading people, can see. If you need to have a good till canceled protection order in there, the best thing I can say is pull it, physically cancel it before the market bell, and then let the market open and trade around for 10 minutes or so, and then you can put it back in if there's no violent, volatile stop hunt. Okay. So with the weekend approaching us last week, we had a couple of ideas. One of the ideas I didn't want to look for anymore was this kind of break up to new highs and then try and jerk the rug on everybody. That left a bad taste in my mouth, no fun. So we were looking for something that had earnings behind it, okay? This is Philip Morris. This is the trade of the week. This is a beautiful basing pattern over a long period. Our earnings are right here. We had the jack down. Look at that. Guaranteed these are a ton of stop orders being run right on the open. I could probably go back and look, but I'm not gonna. If you guys want to look at what the 5-minute candles look like on this day, you'll see that it was all done in the first 10 minutes or even less. So what we have here is a nice double tap of the baseline. So a secondary confirmation that this level down here is in fact a solid support level. We got earnings that shook a few people out and then blasted up with a nice green candle. Well, I can't remember when it was, but somebody was asking me, hey, Steve, after a big green candle and a stock starts flagging, what do you like better? Do you like when the flag goes sideways, or maybe if it pulls back a little bit? And it made me remember the ones I like the most are the ones that flag and start to drift higher. As soon as Andy and I saw this, I figured this is kind of what we're looking for this week. And this came off the scan at Trade Ideas that we call Let's Go Fishing. It's Andy's creation. It looks for stocks that are very healthy on the fundamental side, but have been beaten up on the technical side and are putting in a nice base and trying to break a downtrend and come out of that base. So what a better opportunity to break a downtrend and come out of a big base than having earnings 7-8 days ago, washing out all the weak hands, probably on the open, double testing this bottom down here, and then moving higher. And then as soon as we saw these 3 or 4 candles, it reminds me of a train trying to slowly leave the station before people catch on. Excuse me. So that was called as the long play trade of the week for people who just want to buy stock in their 401k or your self-employed IRA, what have you. Very simple idea. And I also said this one might, this is a big cap stock. This might take a few weeks to get to the profit target, which is around 100. So, this could pull back a day or two and then dig in, build a higher base camp, and then slowly keep moving on its way higher. So after that jerking of the rug last week, it left a bad taste in my mouth. We were looking for something a little bit more conservative. But for those that like the action and those that like to maybe gamble a little bit, Tesla has earnings tomorrow after close, and Tesla really needs to hold this level right here. I'm going to mark up in orange. And Apple certainly didn't help the negative stigma of the way earnings have been going today, but on the heels of Facebook, on the heels of Facebook and Twitter and Netflix having some bad earnings reports. And I'll tell you what, guys, I don't know, I normally don't talk about stuff like this, but Elon Musk has been saying some really bizarre, goofy stuff lately on social media. Makes me wonder if he's sane or what's really going to come out of tomorrow's conference call. So all that being said, if you take a position of a stock into earnings, you pretty much are gambling. But there's nothing wrong with at least trying to identify what your downside risk would be. And in the article of the email, it says for people who are adept in using options as a strategy to limit your risk, you could consider buying put options before the earnings tomorrow. And what you could do is just look at the strike price, the expiration date, and if there's a contract out there where you can see where you can buy one or two, and maybe your loss, the most limit you want to ever limit on a trade is $300, well, you can go out and buy a put option on that, and your downside is limited to 300. So this is an easy way to quote unquote gamble going into earnings. If you really have a hunch about what something might be ready to do. So your downside would be limited if the stock gapped up on good earnings. If the stock gapped down on bad earnings, well, you might get a nice windfall of that particular options play. And again, it's buying a put. Buying a put means you think the price is going down and you want an early look option of the price going down ahead of time, where you can benefit from that. So those were the two basic ideas of Trade of the Week this week. Trying to get back to something more simple as a base building in Philip Morris, but something more aggressive for people who dare maybe play a little bit of action. Tesla. If Tesla, they're priced to perfection right now, and there's a lot of story stuff going on behind the scenes I normally don't get involved in, but I just got a feeling that this one might disappoint, and that's just my feeling. And then lastly, to just kind of round everything out that we talked about, that SONC, horrible example of the using open stop orders and then getting picked off in the first 5 or 10 minutes of the market. So if that's happened to you and you're trying to figure out a way to battle that, just don't use good till canceled stop orders. Cancel them and then put them back in after 15 or 20 minutes or so. All right, looks like questions are coming in. Have I missed anything here?
I thank you for the most part that you got it.
David thinks Tesla's going to gap up. That's what makes a market, David. Buyers and sellers. We'll see. I don't know.
Yeah, there's no more new questions.
Okay. So with that said, oh God, we're running. Okay. So what I did earlier was I went through all 3 Holly buckets and I wrote them down on a scratch paper. So I'm just going to type them individually, and then I'm going to set a price alert on each and talk a little bit about maybe what I like that kind of caught my eye. So let's just get started. One of the first ones I noticed today was Zillow Group. I noticed Zillow G was also in one of the Holly iterations. But here's a really nice pullback off of some nice highs back here and a nice little bottoming tail. We tried to go lower and then pushed back up. And so 2 days of hard selling, including a little bit of selling on the open and pop back up. This is kind of what some of those vault charts look like. This was not a vault, and I don't think I had any of them that were from there. It doesn't really matter, but I like the way this thing sold off. It's quite possible if it takes out the highs of today. We'll just look at this right here. 56.44. So we'll go right click 56.45, and I'll just write on here that Holly. All right, hit save. The blue line goes in. If we get a nice bar reversal tomorrow, we could have a nice little, at least day and a half, maybe 2 days of a bounce, possible oversold bounce play on that one. FTR, again, all of these were derived from Holly. Matter of fact, this one, I believe, if somebody might have asked about this one in the webinar yesterday, and just by complete coincidence, Holly has a buy tag in it today. called finished on highs here. Nice nice volume. The intraday Holly sold at the end of the day. But this chart looks a lot like some of these trend changes that I look at. I like the way we're just going sideways here. It's kind of above 2 of the declining moving averages now. I'm just going to come in and say anything above today's high, any follow through might be interesting on tomorrow.
A couple of buy signals there from Holly in the last big green bar too. Yeah.
And what's happening is the AI is picking up on intraday volume spikes or volume surge or things that are of interest at least for the day, but human and machine coming back, re-examining some of these. This line right there, it looks like about 522 is a pretty significant line. So I'm going to right click and go 523. It's already set in there. And another one, Holly. All right, there's another one that's set for tomorrow. Let's move on here. MDXG. Kind of similar to the last one. This one's been in a couple of downtrends, but look, same thing. A couple of buy tags back above its moving averages here. Maybe it got ahead of itself a little bit. It could be interesting to see if this thing could take out a high from 2 days ago. I'm going to call that 441. And oops, my notes remind me that I got it from Holly. And I got more than just things in a downtrend, guys, don't worry. But somebody's had just a little bit of a look that they might want to break a downtrend. And if those trigger, we'll see if there's any follow through. BWA, Bois. Again, another kind of a trend changer. Kind of a double test of these lows. Both of them had a nice bottoming wick. And Holly saw something today after a couple of green candles, some sideways action. I think above yesterday's high there, right about 46, call it 46.38. Another possible Holly trend change. All right, they're not all going to look like this. Okay, PTLA. This one also, a couple things going on here. Again, like the first one we looked at, Zillow Group. This one had nice 2 days of waterfall, red candles, and then a nice reversal candle today. And if we look left over here, we can see it pretty much filled the gap that was over here in this general area. So we have a nice pullback that filled the gap. You may have people up here that got stopped out today. They would love to be able to have this opportunity down here after a couple of days of sell-off and a nice bottoming tail there. So I'm going to look at today's high, which is 36.16. We'll go a penny above to 17 and just mark this up. I say set it and forget it when I put something into the price alerts, because that's the whole idea. Not buying it right now, because right now it's not confirming anything. But if it takes out today's high, tomorrow we might have some confirmation. CURO, this was a good one today for the Holly players. There's the daily chart. Was this a vault? This was a vault today, wasn't it, Andy? The CURO, I believe it was. Somebody can check on that for me. But if this is from the vault, if CURO came,
yes,
yeah. So, and by the way, Andy, I confirmed yesterday with Brad, it's not the vault like a safe. It's the vault like a pole vault.
Pole vault, yeah, okay.
So there's your pole and there's your vault on the daily chart there. Just kidding. But I like it because it had nice 4 days, a nice sell-off, a big range candle today that went way down and then popped right back up. A really nice bottoming tail. And again, we're all been talking about the vault in terms of the intraday stuff. I think this is a pretty decent looking daily chart too. Where would you put, you think, the trigger above today's high though?
Yep,
probably
that's where I'd put it, yep.
Yeah, so I just go into the intraday chart here and eyeball it right there. And Holly reversal from the vault. All right, SBCF is another one. Another nice waterfall cascade down, and then a nice recovery today at levels that certainly make sense. I'm going to draw a line on the low today. Look left on the low, and you can see perfect pivot point. This was resistance way back here. It was resistance right here. We broke through that resistance, and now we've done a full round trip and returned to that resistance as a bounce here. And I would say just a tick above today's high is probably going to be of interest tomorrow. 29.48, so we'll go 29.49. 29.49. Once again, Holly. And I'll just leave it at that. Okay, that's in there. TDC. Again, kind of similar to what we've been seeing on these other ones. Down here, a very let's see, like that was the prior low back here. We bounced right off that today. Again, 2 solid red days and then a nice bottoming tail coming in today. If this holds and takes out today's high tomorrow, we would like to know about it. And these charts that I'm showing you where we had a couple of down days and then a green candle with a bottoming tail, these are probably best for like a day, day and a half type of swing trades. I don't know how much longer I'd trust them. We're just looking for a nice oversold bounce here. So high of 38.68 is what we want. 38.68, and again, this one was taken from Holly. Got just a couple more here. ePay I thought was interesting. ePay is much more of a trend change, but nice trend. Look what we still got. We still got our topping tail, 2 days of hard selling, and then a little bottoming tail down here where the congestion was before. Same thing in order. Let's just look at the high of today's candle and see if we can bounce off of this. If it doesn't bounce off of this and keeps going lower, it's probably coming down to this swing stop down here. So we'll see. This one's been a nice high flyer, but we'll see if it can follow through tomorrow. 52.96. 52. Oops. What did I say? That's not what I meant to do.
54.96.
54.96. Thank you. All right. MBTA. Nope, that's not the one. That's NVTA. And this one would just be, you know, a possible breakout. I mean, we could probably rally back up to these levels if it got ahead of itself, but you know, tried to go today. If it takes out that high tomorrow, could be interesting. I think that's probably the last one. Go ahead and just leave it at that. Yep. All right. So now, you know, I've looked through a lot of these Holly trades today. I'm trying to find, you know, charts that make sense to me. I know that's a loaded comment for some people who have only been looking charts for a couple of days. The more you can look at these daily charts and get a feel for the price action and what the footprint in the sand are telling us, the more, you know, knowledge you'll gain, for lack of a better term. So what I'm going to do now is I'm going to show you how we can take the price alerts of all the alerts I just set, all of these, and they all say the same thing, Holly, except for the one that I reminded people came from the vault, so maybe there's a little extra special sauce in that one. Right-click, share 10 selected price alerts. So what I'm going to do is copy that link, minimize this, and I'm going to drop it in the chat window. Anybody that wants to receive that cloud link in the chat window, you know the drill. You just basically right-click, save the link, and then come up to File, Load from Cloud, and then you can load from that link. And what it'll do is when I click the load button, or when you click the load button, it'll populate all those alerts that we just set, and you will now have the same price alerts that I have. And if any of these trigger tomorrow, they will all trigger at the same time for everybody. All right. We got a couple minutes. I see people have been throwing in a few charts in there, haven't they, Andy?
Yes, mostly Don.
Oh, we've got an
I want to see
egregious
Facebook and Cat.
Okay, we can do that. What I had said about Facebook earlier was, you know, when you have a big miss on earnings, it's going to take a few days to bleed out the weak hands. The good news, well, there is no good news really. The thing I'm watching for, quite honestly, is the gap fill. As I showed you in a couple charts earlier, this gap is still, this gap is still open down here, and I think it might meant to be filled. So let's just maybe put the cart before the horse and say tomorrow, if Facebook has one of those hideous opening rolls where everybody that put their stop order below today's low or yesterday's low gets taken out in the first 5 minutes, and then it bounces down into this level, satisfies a gap fill, and then starts to pop back up, that might be a level of interest, but I still feel currently it's in no man's land. I don't have really much to go by here. What was the other one he had? Cat, you said? Caterpillar? Big cap cat. Not seeing a whole lot here. This is pretty messy. 4 or 5 months of just sideways action now. It's basically recovered from being above or being below this range that it held, you know, in the beginning of the year. It's come back up. I'm not seeing a whole lot to get excited about. It's a super big cap. You know, it might make a small 0.5% or 2%, 1% move each day. I'm just not seeing a whole lot either direction, Andy.
Yeah, that's the problem a lot of times. It's a dividend-paying stock, and they can stay in these funky ranges for a long time. And I agree with Steve there. It's kind of a, you know, a downtrend over the last.
What did you call that, Andy? A dividend stock?
a dividend paying stock.
Well, so is, I forgot to mention.
Yes, absolutely. And PM could be a turtle too. It may take,
This is one of the things I meant to talk about, and Andy and I discussed over the weekend, the fact that if the market does get a little squirrely, some defensive type of moves could be for fund managers to start moving into stocks with high dividends. And
yeah, I mean,
Philip Morris,
it has over a 5% dividend yield right now. Philip Morris does, which
pretty
is
impressive.
it's not a bad place to park your money.
All right, I'll take a
Get
couple of
squirrely.
quick looks at these other ones that came in. What is it? Is that TTLA?
No, he was asking about
Okay.
the Holly trades
Gotcha.
and what strategies. So
Okay.
Don threw out Costco as well. Yeah.
Costco.
So,
All right. Well, it's a nice trend, but I'll tell you what, this big old blow-off tail concerns me a little bit. We had a couple nice days of sell-off. It's hanging on to this 10-period moving average, which was holding it here and holding it here, holding it yesterday, but today it's starting to bleed just a little bit. I would really keep a strong eye on this. This trend could be getting a little exhausted.
You might want to look at see how it's held the 20-day. Some stocks like to hold the 10, but look how it's kind of, so you might want to eyeball that area down there. Yeah.
Come down here like this and then put a price alert in and call it, a pullback. I'm not going to set it. Oh, that reminds. I already did that. Never mind. Again, for anybody who wants those price alerts, just open up the chat window on the GoToWebinar panel and you'll see that cloud link. And just a real quick demonstration. If I click that link by itself, it's going to look like this. Okay. Come in here and grab the URL code, copy it. Then what I would also suggest is before you're ready to receive it, open up your price alerts. I'm not gonna receive it because it'll duplicate all these, but what you would do from here is just go File, Load from Cloud. This is it, it's already populated. Just click that load button and watch your price alerts populate with all these that we just set together. All right, I'm gonna minimize this and keep that minimized. All right, guys, I think we've come to the top of the hour and the end of the presentation today. Thanks for all your questions. You guys were really active today. That's good.
Yeah.
That's it. Let's bring the slideshow back on, and Scott has a couple of announcements for people going forward.
Yeah, thank you. There's a podcast that we have. I hope everyone's subscribed. If you're not, just search for Trade Ideas Podcast in your favorite podcast application and add us as a subscription. Get the last episode, and then you're ready to get the next one. Also, look through the archives. We got some guests on some of them, and there's quite some enlightening conversations about AI and auto trading and other technologies that we employ. So check it out. There's an ebook. Very timely. Both Steve and Andy have participated in writing it. I'm sure a lot of you already have it, but if you don't, just download it for free. trade-ideas.com/ebook. Put in your email address. It'll get a download link to your inbox. It's 5 strategies for when buying the dip no longer works, and we're currently in a wobbly financial market. So get those strategies, put them in your toolbox. We've got a code that's good for the rest of this month, which means until tonight. So Alpha in July, it's your last chance to use that code. Save 15% off your first month or year of Trade Ideas. Those of you on Standard can also use this to do an upgrade to Premium. Use this for any of our subscriptions. Just make sure it's all in caps when you use it. Info@trade-ideas.com is the email address to send all your questions to. You can follow Steve at TodayTrader on Twitter. Also follow at Trade Ideas and at QuantBot. We have some other handles. Find our page on Facebook, facebook.com/TradeIdeasPro, and like the page so you can share everything we post with your friends. We'll have a recording of this up later on tonight or tomorrow, and you get an email reminder about how to find it. Thank you, Steve. Thanks, Andy. Talk to you later.
All right. See you next time. Thanks.
Thanks, guys. I'll see you Thursday.